Okay guys, welcome to the Wealth for Real YouTube channel. This is Christopher Anastasia, your host. Actually attempted to do a live session on YouTube 3 times now, both AT&T and or YouTube. Just didn't feel like cooperating with me. So I'm gonna record the video and upload it and go from there, guys. So the purpose of the video is to talk to you guys about the market meltdown in the last few days. Kicked off on August 1st, last Thursday, continued on Friday the 2nd, continuing now on day 3, August 5th. Here's my big macro observation, guys. This looks, feels, and rhymes like 2008 recession. If you remember in 2008, mid-September, Lehman Brothers collapse, total fucking meltdown after that. I mean, the year had been a shaky year, and even before 2008 with subprime issues, things like that going on. A lot of stuff that led up to what ultimately happened in the fall of 2008, right before the election. That sequence of events culminating in the Lehman collapse is where I kind of feel like we are today. Different details and particulars. We're not in a subprime housing market issue this time around, but we do have a commercial real estate issue and other issues in the housing market. Okay, so again, the rhyming, not the repeating type of thing. But the Lehman collapse in mid-September 08 feels like these last 3 trading days in the market right now. And please, guys, forgive the bus noises and the sirens. I had to try to get the best signal I could when I was doing the live sessions. But anyway, that's where it feels like we are today. And in another macro sense, when you look at the election and you look at how in the fall of 2008, Senator McCain was kind of saddled with an economic collapse that, occurred on the Republicans' watch, so obviously he was a Republican, but under a different president, a different person. Obviously it wasn't him doing it. It was George Bush who was blamed for what was going on at the time economically. So McCain had to answer for that from a party perspective. He was already an underdog to Obama, and this put him even further behind, and he just was blown away in the election, obviously. We all know how that went. So this feels like the same problem for Vice President Harris, right? You got, instead of incumbent President Biden answering for this coming collapse, and I do believe this is the beginning of the recession. I don't think this is a market pause or pullback. I think this is the kickoff event to a recession or worse. Okay, so I'm working off that premise. So it's not Biden answering for it, just like it wasn't Bush in 08. It was McCain back then, and it's Harris now who has to answer for it. And so Harris has to answer for it and go up against a guy who's obviously going to exploit it to the max. And as you know, guys, if you've been following the channel, I'm apolitical here. I don't like either one of these parties or any of these candidates. I'm looking for the candidate who's going to shut down the Federal Reserve, that kind of thing. But just kind of sitting back and commentating a little bit, this looks really difficult for VP Harris to overcome if it is what I think it is. And so that headwind, it'll be really interesting to see what comes of that over the coming months as they head towards November and people heading to the polls and stuff like that. Other thing I wanted to say, guys, for me personally, I don't know how you guys are feeling about this. This feels like the moment at the end of Point Break, the movie Point Break, Keanu Reeves, Patrick Swayze, when Swayze playing Bodhi is like, I got to catch this one wave. Like this is my whole lifetime comes down to this wave. These kinds of events, guys, where you have these massive market meltdowns, everything goes on sale for a while, gives everybody a chance to reset. They probably happen 3 or 4 times in an adult person's life. You get one, maybe early in life, maybe a couple in middle age, and then one maybe towards the end of your working lifetime. Maybe 3, maybe 4. And you got to make the most of it. You got to have the cash ready. You got to have the dry powder. You got to have a sense of what moves you're going to make to try to, up your wealth during these kinds of downturns. It feels like that for me right now. In 2008, I was in my early 30s. It was just too soon. I didn't have the capital. I didn't have the wherewithal. I didn't have the education. I just missed it. And then it was kind of like, okay, I got to be ready for the next one, which I always thought would come a lot sooner than 16 years. And now it's 16 years and I think it's arrived. So this is a big moment, guys. You're going to see me making as much content as possible, just sharing with you guys, like, what am I doing? Like, what are the next moves? Where's the cash going? What's getting sold? What's getting bought? What sectors am I looking at? What sectors am I not? And, honestly, guys, I'm doing this just as an average Joe. I don't, I used to hold a Series 7 and all that stuff, but I'm just doing this as an average guy trying to figure it out and use what resources I have at my disposal to make the moves. I have no inside advice or insight or anything like that. If you guys like what I'm saying and you do it, good luck. I hope it works out for you. I hope it works out for me. But I just want to share it with you guys and kind of be open kimono about it. A couple of specific moves and things that I've been tracking and looking at that I just want to get into this video, and then I'll wrap it up. So number one, the only thing doing good for me today, guys, everything's in the red. All the individual stocks I own that were paying me dividends and stuff like that, everything's in the red except SRS, ultra short real estate. That actually bounced up about 4%. I do think we're going to get a real estate crash in the next couple of years, so that's why I wanted to kind of accumulate that shares of that ETF. And interesting that it was actually like the only green thing on my watch list, as well as my holdings today. So I thought that was interesting. It's number one. Number two, I did see an opportunity. I had some cash. I actually spent down the cash in the Fidelity portfolio where I just had like dividend money in there. I took that dividend money and rounded off one of my positions, HP. So Hewlett Packard was getting beat up today. It was down like 3 to 5%, something like that. Saw an opportunity to jump in there, pick up some of those shares, which were trading at like $16 or $17 a share. So bought a little block of those to round off a position, and that was that. And now I've got money moving in from one of the bank accounts that I use to fund the brokerage account. So hopefully that money will be in there tomorrow. It should be in there tomorrow, and then I'll be a little bit better positioned to maybe go shopping if something really takes a big dip. But I gotta say, guys, I'm trying to stay disciplined here because I think this is just the beginning. I think buying a 3% dip when the whole thing is going down 30 to 50% is too early. Gotta hold back. It's like, it's the scene in Braveheart, when the horses are charging and they got the spears. You gotta hold as long as you can to the main event. Now, I think at the same time you can stair step into it, but you got to decide those stair steps. Is it going to be, are you going to go in every 3%, 5%, 10%, 20%, that kind of thing. So you got to kind of decide where your tolerance is. How long can you last, and how much resources do you have to stair step in. But look for something. I mean, personally, I'm not going to tell you guys what to look for. You got to decide what you think this is going to unfold like. For me, I think it's going to unfold where you're going to get a 30 to 60% drop on these indexes. So, if my stocks or other holdings that I'm looking at are tracking that kind of decline, then I've got to look at it as like maybe going at minus 30, going at minus 40, going at minus 50, going at minus 60, and just try to pile up as many shares and things like that as possible. So that was the second thing, was the HP position. And the other thing, guys, which I think I only mentioned once or twice here on the channel or my other social accounts, was that I did finally get around to buying a little bit of Bitcoin. I mean, it's really not much. Probably laugh if I said how much it was. But I'd started buying in July, bought it across July when it was in like the mid 50s to the mid 60s. And then when it came down around to the low 50s and just bounced off of 49, I bought some more. I absolutely think this is an opportunity for me personally, at least, to buy into Bitcoin. I was so upset when it bottomed out at like 16, 17. Totally didn't move on it, and then it went back up to like 70 something. I just was so pissed about that. So this is a chance, I think, to kind of stair step into it a little bit. Wish I'd waited a little bit longer and gotten in closer to the 49.50 mark, but I have bought a little bit of Bitcoin and added to that position today when it was down like 15% or something like that. So anyway, guys, I'm going to kind of leave it here. Love your thoughts on the macro situation, the parallels I was drawing to 2008. Love your thoughts on the whole dry powder, point break thing, where you guys stand with that. Let me know your thoughts on that. And then if you're making specific moves, would be interested for you to share them with the community here to see what those are and what those look like. Sort of like I just did right now, the top three things that I just shared. So thanks for watching as always, guys. Really appreciate it. We'll get this video posted right away. And for all the people who joined the live, I really appreciated seeing, I think at one point we got up to about 17 or 18 people had joined in to the live, and then just couldn't reconnect it. Again, thanks AT&T or thanks YouTube. So anyway, guys, thanks again for supporting the channel. Drop me a comment or question about what I shared with you here, and we'll talk with you guys soon.